You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out once again with the option block, everyone's favorite. Hopefully it's yours. It's certainly my favorite, though I may be biased. Bi-weekly options source. My name is Mark Longo from all the aforementioned Options Insider outlets. There's the website. There's, of course, the network. There's our email, newsletter. There's our mobile app. There's a bunch of cool places you can get our content. So head on over there to your platform of choice and get it. Subscribe, listen live, maybe via Mixlr. For in the case of Option Block, it's going to be Mondays and Thursdays, noon Central, 1 p.m. Eastern. Grab that link, set it, and forget it. A bunch of you like to follow us. And Mixlr, if you do that, you'll get notified when we go live. Not just with this show, but for everything we do live. That could be interviews. That could be other shows on here, like we do TWIFO, Vol Views, maybe the Advisors Option, maybe some other shows sprinkling in there. You never know what's going to hit that live feed. It's a surprise smorgasbord. So get on over there, check it out, follow us on Mixlr, and you too can play along in the live partay. That is the option block, and indeed the whole network. And while you're listening to anything, make sure you hit us up, questions, comments, insights. If you have one for a specific show, send it to that or just put it in the subject line somewhere. We'll make sure to route it to the appropriate show. And let's see who we got joining us on this here fine show to talk some options today. Let's start off way out in the hinterlands, way outside of Chicago. In fact, I don't know if it's even incorporated where he is. I think it's still unincorporated territory. They're fighting for land as we speak. We are talking about St. Charles, Illinois, where we are joined by Uncle Mike Tussaw from the, fortunately for us, incorporated St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Oh, we're incorporated. We're a very old town. We have we have good values out here in St. Charles, Illinois. And if you have any questions, I'll take you next door from my office to the St. Charles Historical Museum, and you can learn all about the history of wonderful, sunny, scenic St. Charles, Illinois.
Yes, the history of St. Charles, where they finally overcame Rickets in 2014. Congratulations to you guys out there. And still working on getting that literacy rate above that of the third world, but we're working on it. Good things going on in St. Charles, Illinois. Before you can take umbrage, let me go all the way across the country, at least halfway, out to the hinterlands of Maine, where we are joined by the most rocking of lobsters, Mr. Andrew Giovinazzi from Option Pit. Mr. G, welcome back to the show. How go things in the #1 search destination for options, aka Maine?
I don't know if I can take credit for that, but I feel that it is quite impressive because I think there's a serious number of people with second homes in Maine that are retired, and a lot of retired folks make up a lot of our clients who like to play the market. But I'm still wondering about poor Mike Tusaw with a baseball bat in his forehead over St. Charles. I think there's a divot there from being verbally baseball batted in the slug of the head.
Cow.
Hey, it's a good thing to overcome these, these diseases, these scourges of mankind. So what if the rest of the world overcame it, centuries ago? St. Charles, late to the party, but better late than never. It's like, they claim to be the water capital of the world. We all know how that went. But, they're good at pickles over there. They're good at pickles. As we keep on rolling.
No Skippy Zeros for you.
Oh, okay. I guess I burned my Skippy Zero bridge. Let's keep rolling to the trading block, listeners, before I burn some more bridges.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what's going on, what's trading, what is lighting up our collective tapes. It's a little bit different show. It's kind of fun to do it a little bit around noon, even though it is a pain from a preparation perspective to do it a little bit earlier here in the day, because we get to talk to you with some live markets here on our screen. And as we're doing that, right a little bit past noon central here in the 1-2 time zone, there is a bit of mixed stuff going on the street. Most of the S&Ps and the Qs, they were up more firmly throughout the day, kind of giving up a little bit of that upside. Now Dow kind of deciding he wanted to be the laggard, off about 0.1%. The other two up fractionally. And of course, VIX Cash was taking a much more relaxing start to the week, off about a half a handle. It was off, let's see, down to the 13 handle very briefly. Got down to 13.94, right around 14.35 right now. Actually hit 15.20. So it's kind of been all over. Opened over the 15 handle, dropped down to the 13 handle. Now hovering in that 14 handle range. So maybe people saying, well, maybe a little bit of what last week was done was a little bit overdone. But then again, we do have hurricanes lurking and all sorts of other fun stuff. So perhaps that keeping people from crushing the ball, I should say, too aggressively. Our old friend BXX was below the 30 handle for a while, now back above that 30 handle. 30.15 as we're talking today, got down to about 29.78. Still off about 0.75 of a point. So a lot of that good juice that had piled in of late coming out a little bit. Since we're talking all things VIX and VXX, let's start in Lobster Land. He spends a lot of his day and his days in the chat room talking about this stuff, his nights writing his newsletter, talking about this stuff again. So he likes to talk about this stuff. Mr. Rock Lobster, what's catching your eye out there in today's early session activity?
I think the biggest thing is, are we finally going to get a VIX into the 13 handle, considering we're not doing anything? I mean, so there's a lot of, trade war. I think there's going to be a tariff on a tariff on a tariff. So we have the multi tariff thing going on as of Friday. And then what do we have as of today? I think the market would be ripping if Apple wasn't down 3.5 points. So you're looking at this and you're saying, okay, why is this VIX trading 1431 when the SPX is up? It's up 5 handles. So I think the biggest story is we have some implied volatility for reasons still unknown. I mean, the whole term structure is, VIX term structure. And so usually what I do is I'm always looking at where the futures are pricing the current cash. And at least right now you have some contango at a mid 14 VIX. So there's usually, if people think, oh, vol's going down, you're going to see those futures a little cheaper even than where they are right now, and we don't have that. So I think whatever is worrying the market, and I know we've used this line before in the show, but I think what's worrying the market has not it's not shown themselves yet, as far as trade war. I think the elections seem to be looming because, now will there be an impeachment thing? So there's a lot of like funky uncertainty, even though the economic news overall, I think there was an announcement today that GDP is pretty high relative to unemployment. So that was there was all tweeted around. So the economic numbers are good, but they're not taking the vol down. So that's my big question is why. So I think the reason for the volatility has not revealed itself. And I think part of the problem is some of these things resolve themselves favorably. Like, okay, they finished NAFTA, the Chinese come more to the table on trade, let's say, or they come back to the middle a little bit. Then we could be like off to the races again from, making the bull case. So I just think at this point they're pricing up and down market-wise, and that's why the vol is pricing the way it is. So still, I think a little funky and a little scary in vol land. That's where we are right now. Let's call it funky and scary.
I like that. Our true enemy has yet to reveal itself. It sounds like a good line from Star Wars or something along those lines. The Sith have not yet to reveal themselves. But I'm kind of with you on that front. I'm kind of looking at all this stuff playing out there, and I was like, there is something else. There is another shoe yet to drop, because what we're seeing right now and the indicators we have. That's why I kind of mentioned the hurricanes as maybe one of the things you could maybe throw into that stew as maybe keeping us at these elevated levels. I mean, we're in that hurricane shotgun season where they're all just coming, so maybe there's a little bit of that. But you're right. It does have that kind of other shoe yet to drop feeling about it. And whenever that's happening, it's a little bit nerve-wracking because you never know what the other shoe is. It's kind of the definition of the unknown. Mr. Uncle Mike, sir, are you feeling that same kind of hairs in the back of your neck sticking up, or are you just kind of going along your merry bullish way?
Oh, I'm sorry. Sorry for the little bit of a delay there. I personally know the manager of Skippy's, and your picture is on the wall right now there saying, do not serve to this man, not only in the St. Charles location, but also in the South Elgin location. So you will not be served. I just got off the phone with the mayor of St. Charles, Mayor Rogina, and we have to try and figure out how to calm down this outrage that you've caused in our town by saying such horrible things at this show is
praising you.
broadcast.
I said you overcame nutritional deficiencies. I mean, what's worse than that? Probably Skippy's played a big part in that. So I should get more pictures on the wall, not less.
They're not good pictures. There's riots in the streets right now because once in town that listen to this show at the noon hour. We were excited about the OB coming to town at the noon hour so people could listen to it in the lunchrooms, but I got a lot of damage control to do after that one, Mark. But anyway, with this market, I think that what you guys have made some good points, but I want to look at this from a technical perspective. If you look at the lows from Friday, they're very similar to the highs from January 26th when we had the original peak of the market and everything went down very low. And I'm referring to the S&P, particularly SPY, in particular SPY, as opposed to the VIX. So with that being said, there's not been a rally in the history of the entire stock market that has not had some type of a pullback to it. So if you are a bull and you are looking for a pullback as a buying opportunity, one thing that I think could be interesting right now is the fact that on Friday we really didn't go below. I'd have to look a little bit closer, but we didn't really go much below. I don't think we even touched it, but we were within a few pennies of the highs that went in place back in January. So we broke through those highs on August 24th, but we have pulled back to them as of last Friday. So with that, the other unique thing about this rally has been that the pullback pretty much started probably the day before, or not last week, but the week before. We hit our all-time high on August 29th. And then over the Labor Day weekend, a lot of times there's concern that the real money comes back after Labor Day. Now, how true that is, that's a debate for another time. But since Labor Day, we actually have not had an up day since the all-time high was put in place on August 29th. So with that being said, we're having our pullback. Today has the potential to be our first gain. However, most of today's rally has come from a gap up, but where I'm going with this is that this does have, if you are a technical person on the overall market itself, and you're looking to buy the pullback on a rally, we did bounce off what could be construed as a new resistance becoming a new level of support as of last Friday. So I think we're at a pretty key point from a technical standpoint, along with from the standpoint of the other shoe dropping. If we do have the other shoe drop feel, whether it's a tariff on a tariff, whether it's hurricanes, whether it's a variety of things, the one thing that from a technical standpoint that could be considered to be holding up this market is the fact that we bounced off of the highs from January 26th as of Friday. And if this holds or not, it'll be interesting to see. I think we're at a point now with volatility higher as it is. I mean, we don't have a 9 VIX anymore by any means, but this could be an opportunity to possibly sell some premium. But if you want to have a level of risk management to look at on the market as a whole, you may want to consider the highs from January as well, or also whatever you want to call it, the lows from last Friday. So just to add to what you guys said, that's kind of what I'm seeing right now, along with the fact that Apple is down 3.5 points on the day. That is something else. But interesting times ahead of us, I really believe.
Yeah, you both mentioned it. So let's just touch on it briefly here. The Apple drama, the Apple brouhaha. Apple off, like you mentioned, Mr. Uncle Mike, sir, right now off about 4 handles, right down to about 217.25, so nearly 2% on the day. What is driving all that? Well, our friend there, Mr. Trump, chiming in over the weekend. He said Apple prices may increase because of the massive tariffs we may be imposing on China. But there is an easy solution where there would be zero tax and indeed a tax incentive. Make your products in the United States instead of China. Start building new plants now. Exciting! Exclamation point. Then he put a hashtag MAGA on it. So yeah, that of course, whenever the president tweets at a company, chances are it's probably not going to be a good thing. And that's the case here. Apple taking it on the chin. Now all this talk about what would it take to actually create iPhones here. Analysts, including Bank of America, coming out saying it would the price would increase about 20%. Where is it here? Yeah, they would cost about 20% more if they made these phones here. And it actually seems fairly low. I was surprised it was that low. I thought it'd be higher. But so that there, people are already starting to crunch these numbers. Obviously, that would either way, it's not a good hit for Apple. Either it costs them more to produce in China and there's tariffs as a result, or they move it here and it costs more to make here. Either way, not a good result. Probably why we're seeing this the stock on a bit of weakness here today. And you're right, Mr. Rycroft. I think the stock market would be much more effervescent today if we didn't have Apple dragging it down. Because where Apple goes, people tend to get a little bit squirrely if that one's rallying off. But speaking of names that are, well, this one's not rallying, not selling off. This one's rallying hard. Let's get to it. Let's get to our old friend Tesla. It's time to kick off the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Let's kick things off in the land of drama and madness. That is pretty much another day, another crazy story. It's Tesla land. Tesla, like we were talking this past week, not the best for Tesla bulls. Took a good drubbing, got down, I believe, into the 260s. Let's see, how low did we actually get? 252, actually. So, yeah, not good. I know some people have been hitting us up. I've been talking to people who've been feeling the pain out there. I know a lot of you like to write your Tesla puts. A lot of you in the 300 level. That one perhaps leaving a bit of a mark. Hopefully you've been listening to us and been a little bit more aggressive in your rolling or strike selection. Less aggressive in your strike selection, more aggressive in your rolling. And hopefully that's mitigated some of the pain. I mean, you guys, this has kind of been the trade du jour for a lot of you, writing those near downside puts in Tesla. And it's one of those trades that works till it doesn't. So hopefully you have a plan for these scenarios when it's not exactly working. All that saying, if you kind of kind of grit your teeth and buried it over the weekend, then maybe you're feeling a little bit better today. Tesla up 15 handles today, nearly 6%, pushing that 280 level, 278 right now. Hit as high as 281.5. Of course, all the sell-off last week was on all the drama. Elon Musk went on the Rogan podcast, and apparently he was smoking up and everything else. And people tend not to like that in their CEOs. Go figure. So the stock there was just more adding to the fuel of drama. I listened to a little bit of that show. He also didn't come across that great on that show. He sounded a little, shall we say, odd. So I think that probably helped to reinforce that perception that he's a bit of a nutball out there. And of course, the smoking up probably didn't help. People got a little bit spooked. Now it seems like we have an analyst. And we love our analyst here on the show. But the analyst coming out here from, where is this analyst from? This is a Baird analyst saying, even with the drama, you should buy Tesla stock. The company's Gigafactory, this guy says, creates a significant barrier for competition, and that Tesla's manufacturing capability should be a significant competitive advantage in the long term. They say it allows the company to drive down costs through industrialization of battery pack assembly and economies of scale. This analyst, Ben Callow. That's all it took for the Tesla bulls to get back in charge, driving this thing back up like crazy. So yeah, if you want volatility, Tesla is certainly the place to be. Let's see where this upside action, how this leaves our old friends, the mystery puts, the Jan 50 puts. They're right now right about $1.05 at $1.10. So they've been all over the place of late. In recent sessions, they got as high as, excuse me, they were trading about $1.30 back on Friday. And so now they're kind of back down to around $1.05, $1.10. Seeing 600 of those hitting the tape today, 70,000. We broke the 70,000 level on OI recently. So all those you writing in saying, what is with these puts? Why are you talking about them? Because there's so freaking many of them open out there. And Tesla, for all the stuff that it trades and all it does, these puts continue to remain the juggernaut out there. They're the top dog. And so there's something to that. Regardless of your thoughts on Tesla. Also 700, the 25, the quarter puts lighting it up today. Almost 11,000 open there. And that's not bearish enough for you. 836 of the 10 puts hitting the tape today. Those are trading 11 cents at 12 cents. A total 25,000 open on that strike. 500 the par puts also lighting it up today. 40,000 open there. So yeah, there are some puts open out here in Tesla land. Let's go out another year. Let's go out to Jan 2020. See how things are playing out there. The 50 puts out there. 210 hitting the tape. 25,000 of those. So you just take the 50 strike puts and just these 2 months. You got 95,000 contracts, almost 100,000 contracts open on just these 2 put strikes in Jan in Tesla. It's madness. The par puts doing 130 in 2020, 27,000 open there. 220 of the 20 puts in 2020 open trading today, 17,500 open there, and a whopping 66 of the 10 puts going up out there, nearly 7,000 open there. Mr. Rock Lobster, how many of these are in the holdings of our old friend Carmen Line, sir?
So what we do have, though, is we actually looked at some that you could buy. Reasonable broken wing put butterflies in Tesla. Did Mark talk to you about these last week?
No, he did not.
For like even money. So like 170. The 170-20 flies, the vol was so high you could get those for even money. So I'm not saying that Tesla's going that low, but it could. But it's a very inexpensive flies and ways to sell volatility with the stock. Looking at way out of the money broken wing flies. So I think it's interesting times in Tesla, but it's still a stock that can move like 30 or 40 bucks in a week pretty easily. So it's always, you always see the stock like 250 has been like sort of the number, down to 260. It gets down there and everybody gets sad. And then all of a sudden they start talking it up again and it goes up another 40 or 50 bucks. So I don't know how much money I'd want to spend on downside, although like put butterflies and setting things up like that. The vol's so high, the flies have been very cheap and kind of lucrative. So some of the put crazies have been looking at puts and looking at flies to sort of capitalize on that.
How broken are we talking? How far apart are these strikes?
Par 70-20.
Par 70-20? That's pretty broken. That's like almost coming off.
Well, just the 20, it just helps with margins. So I think it's, you use it for margin and it helps. So it makes it a lot easier. So it's better to buy the puts when you don't exactly need them for margin than when you do. So that's that would be my opinion on that one.
Yeah, that's a good point. Maybe talk a lot about these spreads, but the capital costs that go along with them, they could be onerous. So you spend a little money on some crazy cakes downside, and lo and behold, things work out for you. Let's see what some other crazy cakes we got lighting it up out here in the odd block. Going to kick things off looking at some, there might be a newcomer to the odd block. This is Altice USA Inc., ticker symbol ATUS. This is a broadband communications video services company out of the U.S. Obviously, they're kind of like a joint company coming out of some mergers of Cablevision and Sequel and a couple other companies here. So they're a broadband company. They're trading today right on 18.5, up about half a buck, about 3%. That's a name that does about 1,200 contracts a day. Today doing 17,500, 12-to-1 calls over puts. That's because all the action all the time is in the calls. What caught our eye initially was a sweep of the AAC18s for 2,212 of those bad boys for $1.53, lifting actually through the offer, way through the offer. So pretty aggressive. As the day has gone on, we've seen 8,246 of these bad boys going up out here. Also 3,600 of the 19s going up out here in October. Also worth noting, the SEP's a little bit active too. The SEP, you got some funky strikes here off of splits, obviously. 1697 calls, doing 2,000 today. 1797 calls, doing about 2,000 as well. That's not a spread. These calls are going up independently, the SEP calls of the OX. So there's no spread here, but it does have the feel. Perhaps it's a roll. Maybe someone perhaps putting on a little bit earlier. Let me see. I think the SEP is probably on the sell side. Let me see if I can pull up the SEP here really quick. Yeah, the SEP calls going up. Pretty much looks like they're hitting bids on a lot of these bad boys here. So, yeah, SEP probably sales. So probably maybe there is some decent OI in SEP, about 5,000 each of the 17s or the 1697s and the 1797s. So perhaps rolling some of that out to October. Also worth noting the puts trading out here in October as well. The OX17 puts going up. Those appear to be trading all over the place for a lot of them for 50 cents and 55 cents. It's like paper has been buying those up to 60 cents as well, and in blocks of like 50 at a clip. So buying puts, OX17 puts 1,300 times, no open interest there. Looks like aggressively buying OX18 calls 8,000 times. Let's see what's going up here on the 19s as well. Also, it's like the paper buying those for about 90 cents or so. A lot of those going up small chunks as well. Total about 3,600 there. So no open interest on those as well. So a lot of funkiness going on here. Let's look at a chart and see if this perhaps sheds some light on what is lurking out here in ATUS. And yeah, it kind of does actually. Looking at here about a year ago, last September, this thing was trading almost double where it is right now, right around $30. So this thing has had a rough year. It got down as low as about pretty much where it is right now, about 1840 back in December. Then kind of rallied a bit, down to 22, and it's kind of been bouncing around ever since in the low 20s to high teens range ever since. So maybe our friend here deciding now is the time. Now is the moment. He needs himself some upside movement out here. Weird stuff across the board here, Mr. Rock. Let's see. Actually, a lot of this SEP looks like it actually traded recently as well. The SEP calls, these are the 1697s, traded 2,000 on the 29th of August, traded 1,500 more on the 30th of August, all that additive to the OI, by the way, and then traded 1,500 again on the 31st. So they've been piling in, and the stock has done actually, it's kind of up a little bit since then, so I don't know if they'd be dumping those now. But yeah, either way, this is a bit of a weird one. Mr. Rock Lobster is kicking off with some weirdness and Altice. What is your spidey sense telling you about all this kind of call palooza here with a little bit of puts?
So I think most of the October definitely looks buying, like steady buying, potentially rolling out of some September because there was some heavy open interest there. So this is feeling like a roll-a-palooza, just taking a little roll dollars and taking maybe some of the SEP, taking a couple of the bucks maybe. You got a 50-cent wide market in the SEP 1697s. It looks like there's some sort of funky split on this one at some point, and rolling into the October 18. So it is feeling rollish and bullish at the same time. I don't know.
I
Rollish
concur,
or bullish?
sir. The old roly bully, our old friend.
Bully.
Just coining some new terms here on the show. Why not? But yeah, it has the same feel to me. Seems like they put on some SEP. Maybe it worked their way, maybe not as much, but they wanted to get themselves some more time. They could kind of maybe scratch them or get a little bit out of them. So roll the SEP now, get into OC where you get a little bit more. You have a little bit more time to play. The puts are kind of weird, but not a ton. There's only about 1,200 going up there. Maybe they want to hedge a little bit of their downside as well. I mean, they got money to burn. Who knows? Either way, a bit of a weird one. Actually, let's put this in the. Now here we are, emptying out our watch list. And now we're going to add this one to it again. So we're adding as we take away. Let's see if we can take a few more away from that watch list while we're at it. Let's go all the way back, listeners, to our old friend PagSeguro Digital Ltd, ticker symbol PAGS, way back on April 16th. This one coming up on 5 months ago now here on the show. We talked about the Rock Lobster's old favorite, the old line in the sand puts here at the time. Back on April 16th, we talked about the May 30 puts going up about 5,336 times. Paper hitting the bid for 20 cents. So hitting that old 20-cent line in the sand. Back then, let's see, April 16th, good old PAGS was at right around 33, 34 bucks. Got it traded from as high as 33.70, lows 33.79 up to 35 bucks. So right in that range. Today is 26.32. So you may say, oh, these puts may have looked a little bit rough for these guys, but if these things were May puts, they expired obviously back in May, third Friday there, and the stock in that time frame never dropped below the 30 bucks, and these puts were all still open on expiration. So our friend, he hit it out with this one, Mr. Rock Lobster. He kept his 20 cents. He made a clean $106,000. Not bad for, looks like about a little bit more than a month's work. So your favorite, Mr. Rock Lobster, line in the sand. We can chalk this one up at least into the win column.
We can, and there is a lot of open interest. I was just looking at PAGS on the SEP quarter puts. There's 10,000 open there. Maybe our customer is pushing their luck a little bit. The NOV 22 puts, 23,000 open there. So, they haven't quite. I'm just going to say there's a lot of put open interest in this bad boy. Substantial. That's pretty much where most of the open interest is. So an interesting, I still think there's some kind of story with this one, just like it was the last time. So far, the put seller has been right. But it just does not want to get below this 25 handle. So at least for right now, I think the story is still being written, Mr. Longo, about PAGS, the put selling, and looking like the open interest is still continuing on that realm.
Yeah, you're right. There is some size out here, the quarter puts. So it could be our friend, he made some money and he decided, why stop the train when the train's doing so well? Let's stay on the train and keep rolling. Out here, the quarters would be a little bit more reasonable strike. They did trade about 6,600, so similar size back on the 13th of August when the stock was around 28 bucks. The puts were trading around 90 cents, so somewhere in that range. Let's see, right now they are about 60 cents at 70, so if he did sell them in that range, he's looking all right here. We'll see if he comes to, maybe we'll put those in our, here we are. We're trying to burn through our to-be watch list, and we're adding more. But you're right, PAGS has a lot of put OI, so it could be our friend. He was emboldened by his success. So he took that $106,000 and he went right back to work with it, tying it up on some more puts. So if he's been selling puts, the stock has been off. So it's a challenging trade in this environment, but it sounds like he's been doing all right with it. So we shall see. We'll keep an eye on these, maybe perhaps as well as we go on to our final name here on the odd block today. And let's see, it was from all the way back to February 26th for this bad boy. This is Regions Financial Corp, ticker symbol RF. Today is trading 19.5 bucks, pretty much unched, but this is not what we're looking at today. We're looking at February 26th. Back then, we profiled someone coming in, hitting hard the May 21 calls, 24,500 times for 53 cents. Total of the day of over 27,000 went up. The OI was negligible, so that was all opening paper. And looks like here, if you look back again, these were May calls, so they expired back in May. So if you go back into the history books a little bit, you'll see that the stock never really rallied above that 21 level, so we're never really threatened these calls. And we did see, weirdly enough, about 27, almost 28,000 of these traded on February 26th. They expired at about the 18th of May, so you had right around about a month before they expired on April 19th. Another about 27,000 traded. At the time, though, the OI only got cut in half, only got cut down to about maybe a little more than a half. Got cut down from about 27,000 down to about 11,000. And that 11,000 remained open, and a little bit more, actually, about 12,000, almost 13,000 were open as of expiration back on the 18th of May. So a bit of a weird one if he wrote these and then he did decide to take them off. Let's go to see where the stock was on April 19th, why perhaps he might have such an inclination. April 19th, the stock was trading about 18 bucks, 18.20 or so, which is above, let's see, where we were on February 26th, easier for me to say. February 26th, the stock was at about 1960, so it was lower, and he had some time, obviously, on his side, so perhaps he had a chance to bring some of these bad boys in, but either way, he didn't take all of them off. So if that was closing, and a bunch of the OI did come in, so maybe he took half of them off and then decided to let the rest just go out worthless. It wouldn't be the weirdest thing on a short trade to do something like that, but still interesting stuff, a good chunk of going out. It seems like he kept a decent chunk, Mr. Rocklop, so I'll have to see if I can find exactly what prices they were trading on the 21st of, or I should say on what was the date here, on the 19th of April. But chances are they were substantially lower. Let's say he kept half of that money on half of them and then let the rest go out. Is that a practice you smile upon, Mr. Rocklobster, taking half of the short risk off, leaving the rest to ride?
I think taking risk off if you even are close to making some money, or you're making money, is a good idea. This always was like a put selling stock to me. Like Regions Financial Bank doesn't really do much. Not crazy upside, not going to be bought out. Just, it's one of those, you just kind of sell puts on it and not really think too much about it. So if they are in kind of this little buy right regime, it doesn't sound bad to take some of these options off the table.
No, we're never going to poo-poo someone for taking some short risk off the table here. But yeah, weird stuff. That's why we call it the odd block. And at least now we get to close out some names off of our to be watched category, even though we may have added a few more today as well. So we giveth and we taketh away. As we keep rolling right on into, Uncle Mike needs a little bit of a break this week, so we're going to put you guys in the hot seat instead with a little bit of the old Monday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we ask you guys lots of questions. We actually got one out there right now. A lot of you guys are playing in. We got a little flash poll up there for you guys. We said we kind of posted this late last week, but it's interesting to watch how VIX is evolving and volatility is evolving and what your thoughts are. At the time when we posted this, I think it was Friday morning, we said, hey, VIX threatening 15, VXX back above the 30 handle at the time. Are you guys feeling this? Is this the return of volatility or is it just a blip? So quite simply, we asked you where you guys think vol will be at the end of the week. Gave you a few choices here. They're a little bit challenging because we kind of gave you two as opposed to just one. We said, so right about where we were, so VIX around 14, VXX around 30, which is actually right about where we are right now. A little bit lower, so VIX a little bit kind of equal to or lower than 13. VXX maybe at 29 or a little bit lower. Even lower than that, so VIX 12 or below, VXX 28 or below, or on the upside, higher. Greater than 15 and above 30. Let's go back to Uncle Mike. Let's have him play first. Mr. Uncle Mike, sir, what's your choice, A, and B, more importantly, what do you think our crazies out there are voting for this week?
Let's see. I'll say the crazies think it's going to be, what was the one? It's 15 or lower. I'm sorry. What was that one?
The high one is greater than 15 and higher than 30 in VXX.
Got it. I will say it's going to be lower than 15, and I think the crazies will agree with me.
So I'll put you down for the 13 and below and less than 29. Yes, one equal to 29. I'll put you down on that one. Mr. Rock Lobster, same question for you, sir.
I do not think this is a new pop and vol. So I do think we will be lower than 14 by the end of this week.
Not feeling the vol here. I could see why you might think such a thing. Let's see. Right now, our audience is actually pretty evenly split. Some of this from the early voting that came in, I think, on Friday. But 39% right now saying higher. So VIX higher, greater than 15. VXX above 30. And then 1% difference, 38% saying lower. So VIX below 13, at or below 13. VXX at or below 29. 13% saying much lower, so at or below 12, and at or below 28 on VXX, and only 10% saying right about here, so right about where we are right now, with VXX around 30 and VIX around 14. Yeah, interesting stuff. On a little bit of interesting bifurcation on the old network right now. Let's see, I'm just tweeting this out here so people know we're talking about it. There we go. All right, nothing better than live tweeting on the old ear here. But let's go to some other questions here. Interesting stuff. This was a shorter one. This only goes for a couple of days, so you have a couple more days to weigh in. We don't want to have it run all the way to the end because by the end it's going to be kind of obvious where these things are going. So rather than have the end kind of bias to voting, we had it on be a flash poll for a couple of days. Let's see here what else we got in the old mail block. If I could, there we go. That's better. Someone wrote into us with a couple people actually asked about this. I guess they were talking about them on our old friends CNBC there last week, talking about last Wednesday, someone piling in and to Facebook calls, and EBI8 wants us to know, what do you think of the Facebook calls that were profiled on Options Action last week? I didn't see the show, so luckily he included a little link for us. They said they saw 20,000 of the Jan 2020 270 calls going up for $350 a piece. That's some size out there. I pulled it up right now. Looks like actually there's a ton open on that strike, and it looks like they kicked off actually back on the 24th of August with about 11,500 going up on that strike for prices around $4. So perhaps CNBC a little late to the party there. Then, of course, last week on the 4th, we saw 10,000 more going up, with prices around $370 to $390. And I think the one that caught their eye was the 20,000 lot going up for about $350 last Wednesday. And then they went up more on the 6th, another 14,000 going up for around, they got as low as 275 and as high as 350, so somewhere in that range on that day, another 14,000, bringing the OI up to where we are right now, a grand total of 56,800 calls open on that strike here. This thing's trading about $3, $295 at 305. So yeah, this is, shall we say, bullish paper? Probably. It could be a lot of things out here. This could be someone who perhaps is supersized short and deciding for a little bit of hedge here. Could be the flip side of that, someone coming in and looking for extreme bullishness here. I think what they were chatting about was that they thought this was someone piling in, adding more to an existing position. Someone who's other way, this is someone who's super bullish or concerned that they are in the wrong direction. If they're hedging a short, I probably would maybe go with a little bit of a different strike selection and month selection here. So I don't know if I too much buy that one. This has more of the width of perhaps the crazy. Mr. Rock Lobster, I don't know, I'll start with you. Do you think this has the whiff of the crazy, or the whiff of the hedge, or the whiff of just the weird?
There's a lot of choices.
I give you options on the option block. It's in the name.
So let's just say this. You're long a lot of stock. Would you write the 270 strike call in 2020? Right. Just so we'll start with that. That's a year and a half.
Maybe
out.
If you never picked up a Natenberg text in your life, maybe you would do such a thing.
Yeah. I mean, yeah, you'd sell that and you'd be waiting a long time for your $3, right? So to me, that's a tough buy, right? But I think if somebody's buying those calls, it's kind of like Tucson's waiting for Apple to come up with a new giga, right? So they're doing all this personal stuff like the iWatch and their growth is still Apple's still actually growing revenues quite amazingly. But I think this is one where if you're buying those calls, you're looking for Facebook to kind of strike into another area, right? It's not like Facebook hasn't been growing, but I think it feels like they're getting their platform right now is pretty fully valued as far as, they're a social media thing. They don't have like the reach of Amazon or where Amazon just keeps growing into like every retail market on the planet. Facebook with social media, they've got, what do they have? Instagram. I can't even remember all the stuff they have. So they're huge in that space. So if you're buying those calls, you're looking for the next big thing out of Facebook. And somebody is looking for that to happen, within the next 6 months. So, it might be something worth keeping an eye on, but it's a pretty big chunk of money. It's pretty big out of the money. So I think I look at that and that's what I see. If it's a buy right, it's, I don't know why you would bother writing those and not write something else that's expiring next week for $3. Like you said, they didn't read their Natenberg. But that's when I see that, that's what I think of. I think somebody's looking for the next big banana out of Facebook. And I don't know if I've seen it yet out of them. Mostly, they have bad press right now and stuff like that. So the stock's a little stagnant after running into the high, the low 200s. So I think somebody's looking for the next thing with that call buy. That's how I see that.
It does appear to have that flavor. Mr. Uncle Mike, I know it's Facebook. Is that in your strategic night? What are your thoughts on these crazy upside calls, sir?
Yeah, I think I agree with Andrew on this from the standpoint that as you're looking at it, you do kind of see something to where why would you end up selling that? If you are going to sell that as an opening trade, that's a lot of time to wait for $3. And with that, in terms of a risk reward, that's just a bad trade, quite frankly, if that's what you're looking to do with it. With that being said, if you're looking to buy something like that, and by the way, Facebook is in the strategic night, full disclosure. But if you are looking to buy something like that, and Facebook does come up with the next way with which they can deliver pizza right through your computer screen, let's say, or I don't know, whatever it is they're going to come up with, then Facebook's going to go up a lot more than just to the 270 level, and that's going to be a very smart trade. And for $3, you got to be a part of something that was worth, for only 1% of the actual investment risk, you get to be a part of it. So I would assume that that's just someone that's looking to believe that Facebook is going to have the next big thing.
They're going to be on the Tucson Innovation Index, crushing it. Yeah, that's not just a return to form for Facebook. That thing really needs to get some new lift, some new energy to make those calls really start paying some dollars. Let's see here. Let's go for this one here from Anzew, asking about OTM options. Says, if I go out of the money with my options, are they more sensitive to price movements in the stock? I've had out-of-the-money positions move over 25% when the stock only moved 5%. This goes back to what we were talking about before, about maybe pick up a Natenberg or whatever your book of choice is, Macmillan, maybe Sebastian's books don't really do, oops, I hit the microphone there. Sebastian's books don't really do the basic education stuff, but maybe the Rock Lobster's coming out one of these days. We'll cover you, hit some of their webinars, all kinds of places you can go for free education. You got a bunch of it on our website, got a bunch of it on the OIC website, a lot of places. You can check out our Options Bootcamp show that will disabuse you of this notion quite easily. Go over to our website, subscribe to Options Bootcamp, or go to your podcast provider of choice. Or if you're in our network, you get it already. But if you want to go back and kind of start from ground zero with that show, it's probably the way to do it. And that'll kind of get you up to speed on this stuff, and you realize kind of what you're talking about here. Yeah, first off, concept of delta is something you probably should familiarize yourself with. And at the money it's going to be around 50, above it's going to be less, below it more, kind of a good rule of thumb to acquaint yourself with for your options trading life. And once you start realizing what that delta means, you realize, no, they're not more sensitive. What you're talking about here is just percentage. These calls are cheap. You don't say what they are, but I'm sure they were probably 3, 5 cents, 10 cents, and then the stock moves a little bit and they gain 3 cents, and it's like, oh my God, they moved 30%. But that doesn't mean they're more sensitive in that respect to underlying movement. Now, we talked about weird out of the money positions that do move before, all these Tesla puts you talk about, but that's a different phenomenon. That's talking Vega and skew and a bunch of other fun things that are kind of at work there. That's not delta. So the short answer to your question is no. Long answer to your question is, check out some stuff. Maybe Mr. Rock Lobster, do you perhaps have a webinar that would help this fine fellow Anzew?
We have so many webinars to help this fellow Anzew. I don't even know what to say about it. So yes, trading the out of the money options. We might even have a webinar right now called Options Made Easy coming up, let's say, in a week.
Oh, but do you have out of the money options made easy? There you go. Now, so you're exactly in his wheelhouse.
That covers this very thing. But yes, we will be discussing in the money, out of the money options, what are the decisions to buy and sell, and how far out of the money to actually go, and looking at terms. So just kind of the way that my thing, and I think Mike Tusaw does this very well, is you want to use the option for what it's best designed for. And I think people have a lot of misconceptions about options at a particular strike at a particular time, what they're really good at doing. And once you learn how to do that, I mean, that's all our education business is helping people just make better decisions on the positions they want, so you can actually use the option for the thing it's designed for. So, if you use out of the money options, you have to have pretty specific things in mind on why you want to use them. If you use at the money options, you have to have pretty specific things in mind, because they all react to the underlying differently. So I think that's something that people certainly can learn. I learned that early on as a market maker way back in the late 80s and early 90s. It's so long ago, I almost forget what it was like to be that young. However, I still have a lot of that option stuff in my head, and maybe one day I will write a book on it. But as of right now, I'm way too busy with all the goodies I have doing.
Too many goodies. Mr. Uncle Mike, you got any goodies for our friend here, Anzew?
Yeah, in terms of using the option the way it was meant to be used, whenever I buy an out-of-the-money call, I'm trying to use it for purposes of gamma, meaning that if I were to buy an out-of-the-money call for $1, and yeah, you could get more movement on the underlying initially, having it go from $1 to $1.10, and it seems like that's a 10% move. It's better. However, if it doesn't move in the right time, or if volatility doesn't cooperate, that won't work. So if I ever do want to go with an out of the money option, I'm looking to make money when that option goes from being 4 or 5 strikes out of the money or whatever it is until it starts to go in the money. And the purpose of me buying that is that I think the stock's going to do something, or the underlying, or the S&P, or whatever the case may be. I just don't quite know when it's going to do it, but I think it's going to do it before expiration at some point. And I want to be there when it does, and I'm willing to pay for that time decay just so I get to be a part of it. And if I'm wrong, it doesn't cost me that much, but if I'm right, it can reward me handsomely. Now, in the meantime, I'm trying to create other spreads. I'm trying to do other things to finance that time decay. However, if I am looking to buy an out-of-the-money option, I'm looking for it to be a very, very, very large mover to go in the money. And if I don't get that, then I take my money and go home.
He takes his money and he goes home. We don't go home yet. We keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Before we go around the block, Mr. Rocklobster, I think I buried the lead earlier in a discussion of Tesla. I see you generously shared it with the masses. The real reason that Tesla is up 16 handles today is because Gene Simmons likes it. Because everyone thinks, what is the KISS guy? What's that crazy old nut job from KISS? What does he think about Tesla? And now the stock's up 16 handles. So well done, sir. You found the true diamond in the rough there.
I had to, it was just, that reason for the rally just wasn't good enough for me. I had to really put something in there that had some meaning to all us old people that, listen to KISS.
What is a strung out former, old junkie in a wig and sunglasses in the daytime? What does he think about Tesla? Oh, there we go. 17 handles.
He says we need more Elon Musks.
Yes,
we need more guys like that. And I agree with him, Elon Musk has done all kinds of crazy innovative stuff, and he's just one of those guys. It's just hard to short that guy. I think he's when you're that creative, you're going to have down moments, down times, just because you got a lot going on. But I want that guy to be successful. He already is, but I have to agree with the old Gene Simmons on this one.
The old Gene Simmons, the old Gene Simmons philosophy. Forget Buffett, forget everybody else. Gene Simmons, baby, he's your path to riches. I don't know. By the way, if you listen to that podcast, maybe you'd be a little bit more open to shorting him a little bit, but that perhaps momentary blip aside, what else is on your radar for the rest of the week, sir?
I am looking to see really what is behind the vol. Besides, as we, VIX is a 30-day numbers. It's looking at early October. It's not picking up election vol yet, at least. But peripherally, I think if there's been, juice buying out in November, that can spill to October, and which could be one of the great time spreads ever. So that Novak time spread might be setting up very well, actually, and as time goes on. But looking at is such good economic news, technology still moving, along very well, but we're kind of in this fallow period, waiting for some more earnings to come out again. And I think a lot of it, too, is there's still the politics, there's the trade wars, there's the impeachment, there's this, there's that. So I find it very I think we're in a little bit of a dry area. And, you've got the old saw, what do you buy, Rosh Hashanah, and so Yom Kippur. I think today's Rosh Hashanah. So not being on the floor anymore, I used to know that. I used to know that much better than I do now. But this today probably a little bit quieter every day, and I'm wondering if this vol really, if this VIX can hold up. Saying it wouldn't surprise me if it was 12 or 17 by Friday. Would not surprise me at all. That's the kind of range I think we're looking for, because you're going to get the movement to come through, or it's not going to come through it. At 7% realized vol in the SPX, it's hard for VIX to maintain this level. Somebody's buying options. I just don't know who it is, but that person will reveal himself soon.
They will be revealed to all of us soon. Mr. Uncle Mike, what would you like to reveal to our masses, sir?
Well, I think that just to add to what we had talked about in the trading block, or what you and Andrew had talked about in the trading block in terms of what's happening with this, I just want to once again reiterate the levels with which we're at right now, and that we did not violate the perceived new support level of what was resistance back in January. So I am watching that level very closely, as I always would, along with a certain person's Twitter account, along with the other news with which we have coming up. See what happens with all this. So exciting times ahead, I do believe, and I know I said that in the beginning of the show, but I still believe it. And you're still banned from Skippy's Euros, Mark.
Oh, you just you never forget. You're like an elephant, sir. You never forget. What else doesn't forget is our music. It means we are unfortunately done with this week's sojourn through the world of options. We talked Tesla, VIX, VXX, St. Charles nutritional issues, all sorts of fun stuff. Check it out. The podcast coming at you soon if you didn't get the live stream, but you should try to join us. It is fun. Let's go back around the horn one last time. We'll start with the Rock Lobster, sir. You got options made easy. Any out-of-the-money options made easy coming soon to us, sir?
Yes, we do have options made easy next week. Starts the 18th. Mark is doing a webinar tomorrow night, I believe, on it for free, but then we will roll into the paid gig. Like we said, if you don't find our webinars useful, we will refund all of your money. And we do very few refunds on that basis. I'll let you know that.
I want my money back, sir. This was not worth my money at all. Mr. Uncle Mike, what's cooking with you, sir?
A couple things. Having an event in my office on protecting what you have on Tuesday night, the 18th at 7 p.m. Check out the St. Charles Wealth Management Facebook page for information on signing up for that. And then on October 10th, I will be speaking at Duke University on Wednesday night, the 10th at 7 p.m. is what it's tentatively set up for. By the end of this week, we should have some sign-up information for that as well. So if you're in the Raleigh-Durham area, come check us out. And if you're in the St. Charles area, come check us out as well. We have a very healthy city, contrary to what Mark Longo may want to tell you.
Yeah, I've only just increased your visitor count by like 8 million% over the past few years. But check him out. Nutritional issues and all. Skippy does make a fine. You check out Uncle Mike while you're there. Hit his office. Protect what you got. It's a good thing to do. You got it. You don't want to lose it. Uncle Mike can help you keep it. St. Charles Wealth to learn more. And on behalf of Uncle Mike and the Rock Lobster, Andy, myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in questions, listening to the show, all the fun stuff that you do, tuning in live. We love you. And we'll see you back here on Thursday for the option block, and probably if you're listening to the Mixler, probably be popping in sooner than that with some live stuff. So stay tuned for that, and we'll see you back here soon for more of the option block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.